G'day, I'm Bridget Taylor and this is Currency Wars. Let's have a look at the news wires. Greece is close to winning an extension of the financial aid. That's after the head of group of European region finance ministers said creditors were favourable towards the government's package of the new economic measures. Greece's debt has moved from privately owned debt and is now 70% owned by the ECB and the IMF. This suggests that while Greece is unlikely to repay its debt anytime soon, it will remain in the Eurozone for some years to come. Meanwhile, in the US, the Fed is under massive scrutiny. That's as Chair Janet Yellen testifies before Congress this week. With the Federal Reserve facing its gravest political threat since the drafters of the Dodd-Frank Act tried to strip it of its supervisory powers. Democrats and Republicans are demanding greater transparency and accountability from an institution that has the power to impose capital requirements for banks and to influence how much Americans pay for mortgage and auto loans. Meanwhile, in South Africa, Finance Minister John Cairns' maiden budget speech has been described as prudent and welcoming. That's in the face of lingering ratings risk. The government has introduced several tax measures to keep the deficit projection down, and South Africa's growth forecast was reduced to 2% from 2.5% in 2015. Together with a favourable deficit projection, this should appease the ratings agencies for the time being. This afternoon, I've got John Cairns from RMB and Andre Cilliers from Treasury. Welcome. Right, so lay of the land, we had the budget yesterday. Things are not looking as groovy as they were recently in the US. So I think, maybe swung a little bit of the rand strength that we've seen. Let's first have a look at your views around what's happening with regards to the Federal Reserve. There is talk about the US unemployment numbers being really great. I mean, they're coming through predominantly to the top side. However, the inflation number continues to disappoint. We're going to have CPI out later today, so that'll be an interesting scenario. What do you think going forward? Do you think that the scenario around the Federal Reserve and its supervisory functions potentially could be negative for the US, John?
The supervisory functions issue, no. I think that's a separate issue that the markets aren't going to worry about. Yes, the Republicans are attacking the Fed quite aggressively. For us in the markets, it's all about the timing and the pace of Fed hikes, and we've had substantial changes there after Yellen's talk. She's removed the word patient effectively from the statement, which means they could hike for any time from June onwards. But the market thinking is now October. As of this morning, was pricing about a 45% chance of a hike at the October meeting and about a 90% probability at the December meeting, which seems reasonable to us. Okay, so that has brought that scenario forward, which does place South African bonds under a little bit of scrutiny. And we saw yesterday in the budget, they've increased the bond issuance this year to 22-odd billion, which will be issued by government bonds. Do you think that the market's got the appetite to take that up? And do you think that the swing by the Federal Reserve will potentially see funds not moving into South Africa as aggressively?
Well, I think the increase in bond issuance comes at a very, very prudent and good time for South Africa, in the sense that with the interest rate forecast internationally changing somewhat, and the quantitative easing out of the Euroland, it places our bonds in a sort of a desirable area. And I think that could help us a little bit. But yes, I do think with the numbers that came out yesterday by the Minister of Finance, I think there's enough appetite for that, yes.
Yeah, I was a bit surprised. I mean, it was a good budget, as your intro said, but foreigners yesterday dumped just over 2 billion rand of bonds.
Yeah.
It quite surprised me. I didn't know what the negative was. Maybe it was just a big deal that went through. It had nothing to do with the budget. But at first glance, it is a little bit worrying.
It is a little bit worrying, and I think that that's the concern. I mean, in South Africa, predominantly the bond market is taken up by the asset managers, long-only funds, etc., looking for returns. With the inflation coming back, it does offer that real return again. So hopefully that remains intact so that we can continue to see returns for our investors locally. But the foreigners, is the South African scenario still a story that they want to buy into? What is your feeling in the market?
It's quite interesting, Bridget. We had a big seminar in Cape Town earlier this week, and we had a couple of foreign investors there, and just talking to them, they're mildly bullish South Africa. Let's put it that way. It's not really a South African positive story. It's that we're less negative than everywhere else. We've still got the yield pickup. Bonds have sold off enough. I think there's still a lot of interest out there.
Okay, so that's an interesting scenario. Let's look at what we're seeing in the Eurozone. So Greece is going to get their bailout. Looks like they're going to keep Greece in the Eurozone. It certainly benefits the likes of the ECB and the IMF, who effectively are funding most of their deficit anyway, to keep that baby on board, certainly for the foreseeable future, so that there isn't massive fallout should they decide to exit. From a Eurozone perspective, do you think that that's been positive for the Euro, and what has the impact been in the South African market?
I don't think it's particularly positive for the Euro. I think, if they come to an agreement with Greece, I mean, this is sort of just postponing the inevitable here all the time. They should reach an agreement. I mean, for Pete's sake, give them a haircut, write off a percentage of their debt. They can never repay everything that they have. Write it off, get it over and done with, and move on. We seem to be just pushing things out all the time and not really getting to a point. And that I make negative for the Euro.
But that's as a result of the German influence. I mean, unfortunately for them, it's not just a central bank that makes a decision around those types of issues. Now you've had to have, different entities voting. I mean, Germany's going to go to vote. Angela Merkel and her team certainly going to have something to say about Greece and how they manage their deficits. So with regards to the new government in Greece, with regards to the promises that were made to the voters at that time, it's unlikely they're going to pay their debt. So it is inevitable that the ECB and the IMF is going to have to take some form of haircut anyway. What is your view with regards to the political pressure and pushing this down the road? Do you just think that it's really a story that's done its boots and it's over and done with, and the market's kind of negating what's happening in Europe anyway?
Yeah, no, Bridget, I think I got this one wrong. I didn't think there was much scope for a deal at all. I've been quite worried about it, and then suddenly the Greeks seem to have backed down. We seem to have a deal. I'll put deal in inverted commas because...
Well, he doesn't have any cards in his hand, right? So, I mean, how do you go all in without any cards?
Yes, the Germans held all the power. But as Andre says, they've just kicked the can down the road. They haven't really signed a deal. They haven't really solved anything. A Grexit is still a possibility. And yeah, Andre, I think I'm with you. I think, it's just not a good story. I mean, it's not great. I mean, it would be better if they could resolve it, or just get the Greeks out of the Eurozone. For the moment, I just think we're having euro weakness, and that for Euro Rand, that's just further downside.
You don't think it's an ECB and IMF strategy in terms of protecting their investment in Greece, because they are so heavily exposed in the Greek economy? Just kicking that can down the road means that there is the possibility that they do recoup some of those losses as the Eurozone starts to pick up, and the growth in those weaker peripheral states. If we look at Ireland, we look at Spain, they've certainly shown some form of growth. So if we do prolong this for another 2-3 years, potentially there's less of a stop loss that they'll have to actually pay.
Yeah, maybe, but we're missing a bit of the story here. It's not so much the debt that's the issue, it's the reforms that the Greeks, essentially the reforms that the Greeks don't want to carry out. I think the IMF and the ECB could take the haircut you're talking about if they saw the willingness of the Greeks to go through in the reforms. But they're certainly not going to extend any more money to someone who's not going to change their errant ways at all.
Well, that's the thing. And I mean, if we talk about errant ways, let's talk about the budget. So I want to sorry, Andre, I just want to step in and say, let's take us back to South Africa. And if we look at the budget yesterday, quite interesting for me was an interesting scenario that they talked about funding the deficit. So they're still relying on foreign inflows. So that talks to sentiment around the view of South Africa and how long we can maintain that if, in fact, the US does potentially hike towards the end of this year. That's number one. And secondly, what are we doing about the corruption and the mismanagement of funds? So those are issues that are now going to, that hole is going to have to be plugged by the corporate sector or the private sector. And we're already under pressure. So just give us an overall view of what you thought about the budget yesterday.
I'm going to make it very simple and say, if I go to a restaurant and say that I can have a rump steak for $100, or I can pay $110 and get a dessert as well, then I have no problem paying extra because I'm getting more.
Sure.
And that's what I want to see from the South African government. I want more for what I pay. I want to see efficiencies being created. And it's the same with what John just said about Greece. I want to see the reforms that creates effectiveness.
Yes, but we had that white paper that was issued like a year or two ago, talking about procurement that was going to be placed on the different mandates, the spend that was going to be assessed in terms of stopping this mismanagement of funds, wastage, etc., stopping corruption. We still haven't seen any of that. And if we look at those wastage numbers, we look at this continuous spend with regards to the government sector and the increase in wages, yet there's not that productivity. Do you not think that that is a risk that we run?
That's a risk that we run. That's why I say we want to see effectiveness now. We want to see efficiencies being created. let's not dwell on the past, let's not argue about the past. Let's see how we commit to the future, how we spend the money that we collect wisely, and what we create from it. Not what we've done, what we're going to do is the emphasis. And I'd like to see in the next couple of months how we stick to this budget and implement what we're saying.
Yeah, to me, the standout issue, we've seen all the headlines about this budget, but the really interesting thing is in a year's time, it's really the crunch time.
Yes.
So you look at the budget numbers, by next year they're going to have to be finding another 1.5% of revenue, cutting back on expenditure. That's going to be where we're really going to have to see the minister treading firm. And we have the tax hikes now, maybe more coming, maybe a VAT hike next year.
Okay. Right, now that we know where the lay of the land looks like, let's have a look at the big guns. I'm going to ask you to give us your views in terms of where the currencies are actually trading. Let's have a look right across the set. So let's look at Euro Rand with this Greek debacle. Let's look at the Pound Rand, that's an interesting one. And then let's look at where the South African Rand's trading. It's been quite positive over the last week. I'm going to start with you, Andre.
Euro Rand, I'm going to say that with a negative Euro story, we see a Rand appreciating against the Euro. Look for levels between 12.65 and 13.10 as the very wide one. 80% of the times for the next 2 weeks, most probably 12.70, 12.95. The pound trading down back to its 17.50 levels, and on the dollar rand, I'm going to say that we're going to be in the 11.30, 11.60 range.
Okay, and you, John, any change from that?
So not much. Just a couple of points. I think the rand is overstretched at the moment. It's stronger than all the peer currencies. So just like we had a couple of weeks ago, there is a potential for some bounce back, which would take dollar rand and all the crosses higher. I don't really structurally disagree with your view. The euro weakness, euro rand downside is the multi-week trend. The levels for me, 11.25 is coming through as the key level on dollar rand downside. That was the previous low we had. There's also a 4-year trend line through all the previous lows. To me, that's the crucial level. At the moment, I don't see any scope for us to get through there.
Thank you very much. So now that we know where we stand for the week, let's have a look at the trading ranges. We are looking for Rand to trade sort of 11.30, maybe down to 11.25 if we go down to that technical 11 John mentioned. Otherwise, Euro Rand also expected to continue to remain below that 13 level, looking for sort of 12.5, 12.70, and then potentially trading within that range. So as an exporter, take advantage of blips that you see on the currency. Otherwise, importers, hold on to your boots. You may just get lucky. I'd like to thank my guests today, John, and thank you, Andre, for being with me. And we would like to remind you to send any of your questions or comments to @CNBC Currency Wars 410 or myself at Bridget R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.